What does it mean? A lump sum investment is a single large amount invested at once. Now, why did I put large amount here? Is because there is a misconception that people who have more money only can do lump sums. Like that's why I wanted to put this word itself large. No, there's nothing like that where only if you have a huge chunk of money or only if you have a large amount to invest in as a lump sum that you can park as a lump sum. No, there's nothing like that. It's a common misconception. And no, even if you're able to park 25% of the money that you have saved in a month as a lump sum, yes, it is going to benefit you. Why? Because you are able to buy more units at a lower cost. It's like your SIP, right? But your SIP goes on a monthly basis. Here, you're trying to go one layer up to say, okay, I will try to time it and see if it's a good enough time or not. Right? But you can never know with timing. Right. So who should consider it? It's ideal for those who have some money ready to invest and are open to take more risk. This is what that extra, right? Where you say, okay, I'm going to take that one step up to say that this I will put some money of whatever I've saved, even if it is 20%, 25%, 30% of what I'm able to save in a month as a lump sum. It's perfect. There's no reason for you to go all in, but the whole point is for you to participate always. Right? So what does more risk mean? Now, when we say that no, there are particular things that only certain sets of people can do, it is true. Right? Because they can handle the volatility. Because your personality is such that yes, you can see a lot of drawdowns. You can go through a lot of time for it to recover. Right? That's what we mean by more risk. Now, investors must be comfortable with the inherent risk of a one-time investment approach. See, when you take a more one-time investment approach sort of a game, right, at that point, you can never be sure of whether you are doing at a top or bottom. So take that out of your mind when you're thinking of whether you're doing it at a top or a bottom. But you are doing it at a time where markets have corrected from a peak and they've corrected at least 10 to 15% from its previous peak, right? Which means that yes, it is a good time for you to participate, right? How much depends on your financial condition, how much depends on what your financial health checkup has indicated, right? So if you've not done that part, we'll get to it at the end of it. We'll put a number and then you just send us a hi saying that I want to know whether I'm in a position to take that level of risk for a one-time approach. All right. But the whole idea is for you to be able to understand your risk appetite. And then there is a long term versus short term. See, typically these are strategies that are suited for long term. They are not suited for a short time sort of gain. There is no trading that should happen here. There's nothing speculative that needs to happen here. You already know that what happens in a market that takes you by storm suddenly when some names are down by almost 40% or so. So you can't gamble your money away thinking that this lump sum investment would work for me. No, there has to be a proper plan in place, knowing what your financial condition and then only understand what your risk appetite is for you to take that next step.